Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Thursday, the 9th of December 2021. And I want to start off with apologies. Yesterday, I think I was talking about the CPI report coming out today, Thursday. My mind was shot. I was at the doctor for my yearly physical, 4-hour event. And to make a long story short, I'm going to be with you for a while. I'm in pretty good shape. Little weight has to come off from COVID. That would be something I am going to work on. I've got my treadmill out, and I can watch the markets, walk, and I'll be in great shape, and I'm ready to go. So to make a long story short, well, how do you play this for that? I think that the smart money is going to go to the sidelines in the futures. I think they'll be sitting there. They wait between Friday and Wednesday. They've got the CPI numbers. They should be hot. We're looking for about, on a monthly gain, about 0.7, on a yearly, about 6.8%. When you take it and you extrapolate everything with it, it gives the Fed cover to increase the tapering speed. That doesn't mean the Fed's going to raise interest rates when everybody's telling you. There's too much of an unknown. If you think you can predict between now and December and June, September, or the end of the year next year, God bless you. At the very best, you pay a lot of brains to do it, and they'll revise it over and over because it's a moving target. What you deal with is what's right in front of you. We have the CPI, then we have the FOMC, and then we go into the year end where you normally, no matter what these reports say, Santa tries to arrive and lift the markets. That's the attitude I have on it. When I look at Tesla, are we going to try to fill this circle area? That is still the question. When I put the swing line study on, you've got a pattern of lower highs, lower lows. Where I went to school, that's bearish. The market is under the 18-day average of closes, so the filter on the swing line is bearish. A potential target's the lower Bollinger Band. Why? Because markets will trade within this algorithm called a Bollinger Band 95% of the time. So when a market goes down to it, it is not uncommon. The traders that understand that, they go, so let me understand this. I'm supposed to stay short, if that's what I am, and try to play that for that other 5%, it's going to keep dropping. Why don't I take part of my position off? That's the mentality that I teach. And that's what I think went on. So now if you come back down through it, then they try to push it to see where can they go. And again, that gap could be the area. By the way, you are not oversold. So you have the trend down, the bias down, and momentum still pointing down. Apple, I'm going to use that same idea. You get up to a Bollinger Band. After you, first of all, this is called breaking out of a sideways pattern. So you have to understand in Bollinger Bands how they work. And when you narrow in the Bollinger Band, eventually you're going to break out of them. So do you want to be a hero and sell the first breakout on a narrow band? No, most people will hold on and see, can they get a breakout? Now let me explain how that works. I look and I teach you what part of the range is the market trading in. Are we making higher highs, higher lows? Are we over it? Then you got a breakout. And until you take out these lows, and you'll hear me say this over and over, I think the market is on its way to much higher prices. And that's what has happened. Now, we're getting a bit long in the tooth. Could the market embed? Of course it could. In order to embed, which is now the slow stochastic, the overbought, oversold, or getting stronger, getting weaker oscillator, it's not just overbought, oversold. You got to have these numbers to embed, which takes it out of being overbought. You got to have these numbers lock in and stay over 80 for several days in a row. I don't know if I'll be able to get that to do it. There we go. So today they did, yesterday they did, and what about the day before? Not so on Tuesday. Tomorrow's an important day. I think you're overbought. You're susceptible here. So, am I going to be a hero? No. I understand what traders are talking about. I just read about Apple, about the new goggles that they want to come out with. People are predicting 10 years from now, your iPhone will be history. You won't be using a phone. You'll have glasses or something similar to that where you wear it, you see a screen, your phone, you're talking, and that's the next big thing if you want to wear glasses. We'll see. In ARK, still bearish. I saw Kathy Wood's interview today. Wonderful, wish her the best, but she's gotten her her fund has gotten, not her, the fund has gotten annihilated this year. As you know, probably one of the worst performers, and yet she was the best performer last year. I've seen that in futures so often. She's not dead by any stretch of the imagination. They come back. They lost the embedded reading. We'll see what happens. And she's so heavily weighted in a lot of things that are Chinese, as I see it, that this big meeting that's coming up now where they decide China's economic growth and what they're going to do, I think they're going to do a lot of easing. That's what I'm looking to see. Ultimately, that probably benefits some of this over time. In XLI, you got to be careful right here. The market's got lower highs, lower lows. It is over the 18-day average, but it's overbought. I don't see anything to do in that whatsoever. XSD, why do you want to think that you're going over the upper Bollinger Band? Most times you don't. You got up there, you fail, and that's what the market's doing. So it's gone from the upper band to the lower band to the upper band, and it's failing again. There's nothing. There's better places to put money. In cannabis, are we going to lose the embedded reading? You need a reading over 21 for me to come out and say definitively, you lost the embedded reading. The odds now favor you're going to the 18-day average. Until it's lost, the pros are selling these rallies, and that's how I think they're going to handle it. In the home builder, just like the others, you're now coming up to the upper band. You got a CPI number that's going to possibly set everybody to thinking mentally, interest rates have to go up. Is that friendly to home builders in an overbought market that's up there? Probably not. So you look and you say, hey, if I get under 85.16, what does that do to the chart pattern? Because I'm a chartist. At the end of the day, I love to talk to you about this, but this is what I look at. And I teach the first challenge of an upper Bollinger Band, out you go. It's that simple. It's not difficult. I teach it in a simple video course. Your kid's going to get it. Take the course. Go to the website under the word research, the enhanced Bollinger Band course. Tell me you don't learn something out of that. It is different than what you've seen. That is what's unique about it. I teach it. It's not your standard Bollinger Band approach. It's very different. XLE. Lower low, higher high. That's not a trend. And just sideways. I don't see anything there. Let me come to emerging markets. I think emerging markets are up to the point where the resistance should come in. We had talked here that, first off, when you saw the market lose its embedded reading, come up like that, game over. And I was telling my subscribers that if you get over this high right here, be careful. You could ultimately get to that 18-day average of closes. And here you go. And you tell me the number that the market's failing at. You don't think I've been saying that here? Go look at the videos. They're all up there on YouTube. I know what I was saying. I'm stalled out there. I don't know what to do with it. Gold. One part of me is friendly gold from inflation. The other part's bearish because I'm a chartist. Until you lose the embedded reading, and you haven't lost it, you tried yesterday. You got to a 20.78. I need to close over 21, not 20.78, for me to tell you you got to be out of shorts. No, you weren't. So you've come back down. It will take nothing for that to happen if you clear yesterday's high. I know how the math works in these numbers as they plot them out in the slow stochastic. So that would be your get concern number. Right now, nobody has control but the momentum traders, and it is still bearish basis that. Gold miners, not the same case. The gold miners lost the embedded reading. So when you lose the reading, here it's embedded. Now you get a reading 2085, that's not lost, but here it is lost. Game over. Now I just look, even though it's backing off, I think the market's going back here. But there's a very bearish situation happening here. You tell me what this 18-day average is doing. It's getting ready to arc underneath 3220, the 100. So then you would have the 18, the short-term average, under the medium term, the 100, under the 200-day. Any way you want to cut it, that's a bearish setup. In COPEX, copper, with China now having this big meeting and wanting to expand the economy and get things going, a market that I like is copper. You use it in so many different products worldwide. So on pullbacks, I still like it, but it's too overbought. You're in a resistance zone. I think you bottomed, but I don't think the market's ready to say, okay, I want to just own it here. TLT, the pros are out. You see where you went to? What's the neutral point on a chart? I keep telling you, the line in the sand. Write that down. The line in the sand, it's your neutral point. It's the 18-day average on a chart. Where are you going into tomorrow's report? FXE, where are you going into tomorrow's report? Right on it. There's a lot of markets here that I'd be very cautious about, and I'm going to cover these at 9 o'clock in the morning. We'll have all these numbers. So for my paid subscribers, I'll start recording at 9. You're going to have me cover all the different sectors that we do. Now, on the weekend, I'm going to cover you with longer-term charts, but you're going to get 40 coverage of charts in the morning. Me doing that after I've had a chance to see this CPI number and how the market is reacting. Should be a lot of fun. One of the things I like to do is let the first 15 minutes of a day go by me, minimum, if you're a trader. So I'm going to cover this and more. And I'll throw you out exactly how I think the market's reacting, if there's any new trends that are worth going into. Do you do anything between Friday and Wednesday in certain markets? Because you got the FOMC meeting, you might want to get both those past you, and then all you got is Santa coming. So different ways to look at the marketplace, and that's what I think you want to do. How do you get this? Go to the website. You're going to spend, I want to break the news, it's going to break your bank, $8.95. Spend it. You're going to get 24 videos a month. Come on, each about 20 minutes long, full analysis, buy here, sell there, the logic of the market, what's going on. I do very little talking there about all the fundamentals. It's a chart game, and that's where it comes about. So if you go to our website, under the word research, it's there. If you have questions, call my staff. I'm Ira. Can't wait for tomorrow. Have a good day.